What's up everyone? In this video, we're going to be talking about the $78 million stock dip buy. So I did a lot of research for this video. We have a great video today and I know a lot of you will really like it. So stick around to the end. We're going to cover a lot of great information and there is a really big opportunity that we're going to be talking about today. So stick with me to the end and let's get right into it. So before I release the ticker symbol for the company, I just want to showcase what's been happening over the past year. So if we look right where my cursor is, right on this main screen, we can see the 6-month chart has been brutal. Even the 5-year chart has been okay, to say the least, right? Like the past year has been brutal, right? But besides that, the stock has been exploding. But what's weird is that if we look and see the results that this company is getting, like the revenue and cost of revenue up to the top right over here, the company is growing at a crazy pace, right? Like the revenue is just exploding exponentially. The total assets are exploding. The gross profit's exploding. The cash flows are exploding. Like the company is doing very well, right? It's growing at a crazy pace. It's a profitable company and it's doing very well. But what's weird is that the stock doesn't reflect that. So you have to ask yourself, if this company is doing so well, why is the stock getting destroyed? And the answer to that question is because of delisting fears. So the stock we're talking about today is Alibaba. And I know a lot of you guys are going to freak out when you hear that company name, but there's a lot of misinformation with this whole situation going on right now. So I know a lot of bad news has came out over the past year about of China potentially delisting Alibaba and other Chinese companies, right? And it has caused a lot of fear and panic into Alibaba, even though the company is doing extremely well. Like if we look at this chart to the left, this is Alibaba. If we look at the chart to the right, that's the S&P 500. In the middle, the red is the S&P 500 and the blue is Alibaba. So we can see the market has been exploding, but Alibaba has been moving in an inverse way. So it's kind of like, it's basically negatively correlated to the market right now, and there is a big opportunity with it. So basically what's happening is Alibaba is just getting destroyed right now because of fears of delisting, and there's just bad news with it. You know, when it rains, it pours. You know, the company's doing great, but there's just a lot of bad news. Short sellers are coming in and people are panic selling, mainly because of misinformation, in my opinion. But either way, it's at a great price, right? It's doing very well. And Charlie Munger, who is Warren Buffett's right-hand man, is buying the dip big time. So he's really buying the dip right now. And Charlie Munger is, even though he's older, he has a lot of experience and he has a pretty good track record of getting some pretty awesome returns. So Charlie Munger, like I said, he is Warren Buffett's right-hand man. He is the chairman of the Daily Journal Corporation, and Alibaba is now worth, or it has a 27% weighting in his Daily Journal portfolio. 27%. 27%. That is huge, right? So I think that should tell you something by itself. But either way, you're probably wondering, why is Charlie Munger buying the dip on Alibaba? Like, it must be at a great price right now. And basically, Alibaba is a very strong company, right? And it's very important to China, but it also gives some diversity, especially if you're holding a lot of U.S. companies. So there are 1.4 billion people in China. Out of that 1.4 billion people, 953 million people in China are active annual customers to Alibaba. That's 68% of the population of China is a customer of Alibaba. 68% of the population. That's huge, and they're making a lot of money, but the stock is tanking. Another good thing is that it's growing at a crazy pace. Like if we go back to the spreadsheet over here, let me pull it up, we can see that their revenues are exploding. Their assets are exploding. They're a profitable company. Their cash flows are exploding. Like even if we scroll down to the quarterly data, like the company is doing very well, and in turn, their stock is getting destroyed because of delisting fears. But let's say in the worst case scenario, Alibaba gets delisted. You're still going to own shares of Alibaba. It'll just be on the Hong Kong exchange, or the company will just buy the shares back from you and the company will go private. But either way, the company's growing at a crazy pace. It's at an amazing price. It's growing, and even in the worst case scenario that it gets delisted, you'll still own the shares. You still own the shares. So like people are kind of freaking out for no reason, in my opinion. With that being said, I don't even think Alibaba or the Chinese government is going to make Alibaba delist. The Chinese government straight out said that they're not looking to force U.S. listed companies to delist. And I know China can be corrupt and they can easily lie. But let's think about that. Do you really think that the Chinese government would delist their own companies on the U.S. exchanges? Like, it just doesn't make sense. And if they did that, they would be sending a huge message to the rest of the world: don't invest into Chinese companies. And that is one of the last things the Chinese government wants. So it's like everyone's freaking out about delisting fears and U.S.-China regulation fears, but even if the bad does happen and Baba does delist, they're still going to own the company. And then two, like, even if it does it's probably not even going to delist in the first place, in my opinion. It's not a logical decision for the Chinese government to make. It's not a smart thing to do. They'd be essentially shooting themselves in the foot. And the stock is at a very low price right now. So with that being said, there's a lot of fear in the market, especially when it comes to Alibaba. But a lot of times, the greatest opportunity is when there's the most fear in the market. Like, even if we look back at the S&P 500, when there was the most fear over the past, I don't know, maybe 3 years or so, was in, I guess you could say, March of 2020, when the pandemic was just starting, right? Guess who made the highest percentage returns over the past 3 years? It's the people who bought the dip when everyone else was freaking out. So it's like, when everything's all fine and dandy and there's not any worries in the market, yeah, you can invest during those times, but you're going to be paying a pretty nice premium for that. But the people who buy the dip, or at least buy when everyone else is fearful, normally does pretty well as long as they're buying solid companies. And in my opinion, Alibaba is. With that being said, looking back at Alibaba, they are, like I said, I've said this a couple of times already, but they're growing at a crazy pace, and they have $50 billion in cash. They're an online, I guess you could say, e-commerce / technology company in China. And the main thing is the price that they're at. And another good thing is that Charlie Munger, who is a very well-respected investor, is buying the dip. He would not be buying the dip if he did not fully do his research. And another thing is he has 27% of his portfolio in Alibaba. Like, that's pretty big. And I know a lot of people, will say, well, Charlie Munger, he's getting old, and this just might be his final YOLO trade. But that's not who Charlie Munger is. He definitely did his research. And another thing is, like, it's investors' money. It's not like he's just taking $27 or $72 million of his own money and just dumping it into the stock. Like, he has investors behind that too. And it's just that argument is flawed, in my opinion. But with that being said, everything going on right now is kind of ridiculous, in my opinion. The stock is just getting beaten down because of fears of delisting, but the company's growing, and I don't even think it's going to delist. So with that being said, is Alibaba a potential play like Apple or Microsoft? Absolutely not. It definitely has its own unique risks. But then again, the company is making a lot of money. They're profitable. They have $50 billion in cash. They're growing at a crazy pace. And the main thing is that they're at a good price. They're at a really good price. We have some smart money flowing in. We have Charlie Munger flowing in. Of course, some institutions are selling off too, so we'll definitely keep that in mind. And I would say more importantly than anything else is the diversity aspect of what Alibaba or other stocks can do to your portfolio. So for example, like if we looked at the S&P 500, over the past couple of years, it has basically done nothing but go straight up. And that's awesome, And companies like Apple, Nvidia, Microsoft, Amazon, they've all been exploding. And that's awesome. I love to see it. But we're definitely seeing some profit taking with some of these companies in the market right now, like Apple and Microsoft, AMD, Nvidia, Tesla. They're definitely taking hits. Now, they're going to do fine for the long term, but for the short term, it definitely hurts. And at the same time, we're seeing a lot of money flow into growth companies, value stocks, and even some of these China stocks right now. And it's mainly due to the prices that they're at. And another thing is if we go back to the sheet really quickly, let me just pull it up. So if we go back to the sheet with the comparison, we can see over the past year, Alibaba and the SPY has had basically just a negative correlation, a correlation of minus 0.89. So when the market goes up, most of the time Alibaba goes down, and when the market goes down, Alibaba goes up. So if we look back at the S&P 500 this week, over the past, I guess you could say 4 days, it went from like highs of $479.98 all the way down to like $466. So, you know, it definitely took a hit. At the same time, we had Alibaba go from lows of 115 all the way up to highs of like just under 134. So like they kind of move like in an opposite way, which is not a bad thing. You know, like in my opinion, I feel like it's at a great price, and I feel like people are really overestimating or they're just like giving too much power to the news, you know, like you're going to see articles saying, oh, the company's going to delist and whatever, but it's like, even if it delists, you're still going to own the company anyways, and it's at a great price and they're making a lot of money. So it's like, I think it's worth a play. I'm going to take a small position on it. Is this like an amazing safe company like Apple? No, it's not. It's a riskier play. It's definitely volatile, but I just feel like people are really there's a lot of conflicting information out there right now, and I feel like people are overlooking it. So let me know what you think about Alibaba. Let me know if you think it's at a great price and you might buy the dip, or let me know if you think it's going to keep on falling or it's just not worth touching for you, because, you know, some companies just aren't worth investing in. And, you know, maybe if you don't want to have exposure to other countries, that's fine, you know, but some people might like this, and I wanted to point it out. So thank you guys so much for watching. I hope you learned something, and I really appreciate all of you watching. So if you liked the video, please leave me a comment down below. If you didn't like it, please also leave me a comment down below. I greatly appreciate it. But thank you guys so much for watching, and have an amazing weekend.